Gold and silver prices are challenging resistance. Is it ready for a retrace? Welcome back, everyone. If you're a regular follower of my channel, you know I do look at the higher time frame, which is the daily chart. I trade on the lower time frame on the hourly, the way I demonstrate, and you can apply your own trading timelines. Now, in terms of for gold, you can see here it's hit this resistance up here at 43.80, and it's actually having a bit of trouble breaking through that resistance. And that's probably due to this bearish divergence. We've got lower highs on the CCI versus an equal top here on these highs on the price. So that's a bearish divergence on the daily, and I've drawn a target range here. That's a 23-38% range. And if I showed you the Fibonacci retrace from that high, take it back to that low there, that's a 23-38% retrace on the daily for a potential pullback as a minimum target range. Now again, don't go placing short orders, but again, it's due to this bearish divergence on the daily. On the hourly, we've got here going from long from that point there, where the price is broken above the moving average range and has been bullish above that moving average range since around about the 10th of November. That's where we take long trades only during the hourly. You would have taken those long trades in accordance with the moving averages, paying attention to any downside risk on the CCI giving you a warning. So you can see there's a bearish divergence there versus the price. The price breaks down. That's where you would have closed out your first trades. Going long again in that little period. Closing it out there, going long again there. Now here you'll notice another bearish divergence. Paying attention, but again closing it out when the moving average breaks down. And you can see there the trading using the average down approach. And currently you'd still be in the trade, waiting for it to break above in a more positive direction with a potential bounce from where we are on the hourly. So for silver on the daily, that's already broken above the resistance at 64.65. I haven't moved that resistance line yet. Looks like we still might have a bit of an upside to go. But again, notice we do still have a bearish divergence on the daily. We just have to readjust those highs on the price and the CCI. That's still a bearish divergence. Also, we have to adjust this target range we've drawn. And what we do now is from that new high, take it back to that significant low. We'll take it back to that low there. And we move that target range slightly higher to that point there. That's a minimum retrace we can expect. If the price retraces from where it is, of course, it could go higher, in which case we have to then readjust the Fibonacci ranges. On the 1 hour back test, again, going long during those periods, closing it out, going long, closing it out, and so on. The average downside and paying attention to any divergence along the way. And where we are at the moment, you'd still be in a long trade, with a couple of positions open, possibly. And again, waiting for that to break down below the moving average range to close out your positions, possibly. If you'd like to get some share trading ideas, why not go to the Patreon page, links in the description below. These are some of the trades we've taken in December so far, and we've generated about 5.58% return for the month so far. Again, reference the Patreon page, links in the description below. Hit that like and subscribe button. Thanks for watching, and see you in our next update.